this is in the second year after our acquisition. We acquired this business in July 22. The standalone business of Bharat Forge is doing well given the market conditions, and weakness is specific only to a certain segment of our industrial business, which is largely oil and gas. We have made initial breakthroughs in 2 new sunrise sectors, and we expect that these will become large growth sectors for us going forward, and these will this will ramp up from next year, but will become meaningful by about 27. I want to credit our overall management team and especially the team in finance for managing our balance sheet extremely well. In spite of all the capex and investments that we have made in the last 5 years, our balance sheet is pristine, and it provides us with a lot of dry powder to take benefit of opportunities that may arise. I would now like to talk about some of our medium to long-term priorities. BFL has transitioned substantially over the last 5 to 6 years. We have been able to cushion the impact of potential cyclicities from any one business sector or more with new initiatives like defense, industrial casting, having a large business accruing. In the future, the EV business also will provide such a growth opportunity and further accelerate the growth of the business. The aerospace business is now on the cusp of a major takeoff and on a solid growth trajectory, which will continue to see momentum in the next year as well. JS Auto closed FY24 with a revenue of 567 crores and an EBITDA margin in Q4 crossing 16.5%. This business will double over the next 4 years, probably double or more than double over the next 4 years, and we are working on a number of new initiatives around more value addition, operational efficiencies, and capacity expansion, including NPD, which will translate into stronger numbers for both the bottom and the top line going forward. This business, just to tell you, has grown 30% YOY 2 years continuously and will continue to grow in a strong manner. On the overseas front, as Kedar mentioned, achieving profitability and stable operations of our aluminum business remains topmost priority of the leadership. Our European aluminum operations are already in the black, while the US business will progress towards operational stability in the next 2 quarters. We are very confident that for the full year of 25, in the fourth quarter, we will see extremely strong performance from our global subsidiaries. The aluminum business continues to see robust demand with growth driven entirely by drivetrain agnostic components, so we are not at any risk from any potential slowdown in passenger car EV, which is something that is a cloud hanging over a lot of supply base globally. The defense business has also clocked a strong revenue of 1,561 crores this fiscal, with execution for all our export orders progressing on schedule. More than 80% of this revenue is export. The defense business will move entirely into the 100% owned subsidiary, KSSL, in 25 once their new facilities are fully commissioned and the licenses get transferred to those physical facilities. This will involve transfer of manpower and customer contracts from Bharat Forge to KSSL. While it will not affect the consolidated results, there will be some change in the standalone earnings as this transition plays out. Some of our investments such as JSA have borne fruits, while the progress on e-mobility is beginning to show a lot of promise and is moving in the right direction. FY25 will see a lot of progress and growth in the e-mobility vertical as well. I am confident that given the multiple growth engines, we should see strong growth for 25 and our ROC to incrementally keep growing and cross the 20% mark in the next 2 years. I'm now happy to take your questions, and me and our team here will try to explain to the best of our abilities.
If you like this video, then like, share and subscribe to ET Now.